All right, let's do it. Aloha mai kako, welcome back. Business, credit, and capital day 2. Nice to see some familiar faces from yesterday. I hope you guys enjoyed that. Today, we're gonna get a little bit more into who we are as Alliance Commercial Finance and the role that we play in the business finance world, as well as the specific funding options that might be available to you folks as business owners. So first we'll start with kind of the challenge. And I mentioned yesterday, right, the number one challenge that businesses face in getting their business started through the first 5 years and on is almost always, I hear, getting access to capital. And then we'll talk the solution, the role that ACF plays as a solution, specifically how we help, the step-by-step process of what you could expect if you chose to work with us, how we help our clients, and then the specific funding solutions that we offer. And we won't be able to go through every single funding solution, but kind of the more popular ones and the more commonly used ones. So first, the challenge we all face as entrepreneurs is that lack of access to capital. 1 out of 5 businesses fail within their first year, and even more fail within the first 5 years of getting started. Typically, the main reason for this is that insufficient access to capital. 86% of businesses rely on credit, loans, or some form of debt financing. And yet banks are, we know, turning down 8 out of 10 loan requests on a daily basis. And this was data from prior to 2020. So they have likely gotten even more stringent since. Many entrepreneurs don't necessarily know where to go to get the funding they need, or they think, it's one of the 4 banks we have here in Hawaii, and they might be intimidated to walk into a bank in their finest manaola and try to get all their paperwork together, kind of a thing. So it can be an intimidating process. And so Alliance Commercial Finance, we were started to be by my father as as that solution in the community. I mentioned yesterday, we were founded in 2013 with the sole purpose of addressing these problems and being that solution for small businesses. On the left is our CEO, CFO, founder, Sanoe Burgess, a lifelong businessman himself, whose primary intention when starting this company was to help other entrepreneurs and business owners like himself who had difficult experiences with traditional sources of funding in the past. And so our motto, as my dad and I are both entrepreneurs ourselves, is very appropriately, we are entrepreneurs funding entrepreneurs. And so we are more than commercial finance brokers, more than loan officers. We are, my favorite term that my friend recently came up for me was a funding advocate. When you're investing in a home, you have a mortgage broker, you have a real estate agent walking you through the do's and don'ts of, purchasing and financing a new home. And without this help, it's typically very difficult to get the best deal possible, right, with ease. And so it could be argued that financing your business is just as strenuous, just as difficult of a process. And so why would you ever go through that difficult process of accessing business funding without that same consultation guidance? We provide free consultations to better understand your qualifications as a business owner. Our goal is to understand you as a business owner, as a person. We want to know what your short-term and long-term goals are for your business. We want to understand why you started this business. What is your why? Even these types of personal attributes can sometimes, direct us and help us make the right decision for you, whether we're the right fit or what type of program we might choose for you. And then, of course, we want to assess your credit, the business cash flow, any collateral, meaning property or equipment that we can use to leverage to help access some funding. So we're assessing what it is you want, what it is you need, what it is you're qualified for, so that we can find the right fit for you. And we can do this because we're a one-stop shop for all forms of business finance, from traditional and all, to alternative and everything in between. We have well-established relationships with a variety of resources. So from private individual lenders to large public banks that you might be familiar with, and then even, small private banks that you might not be familiar with. And so we're that connecting piece for our clients and our partners. We're different from the traditional banks in that we offer, besides just being that one-stop shop, which is fairly unique, but we also offer creative financing solutions that traditional banks typically don't provide, that help us better serve our clients that might have a difficult time qualifying for the more traditional loans. And so, for example, we actually have some programs tailored towards helping those that might not have established cash flow or not even the best personal credit. So we can work with business owners even if they've been turned down from their traditional banks in the past. And so this is our step-by-step kind of how we help. The first step is that initial consultation. Again, we want to learn about you, your history, your why, how you came to start your business, why you do what you do. You have a family? Are you planning on having a family? What is your why? We want to know short-term and long-term goals for your business and family. And then we kind of assess, again, those assets, credit, cash flow, collateral, and make decisions based upon what handful, maybe 1 or 2 programs, maybe 3 programs that based upon what it is you want and qualify for, we can offer you those options. And so that's step 2, offering the options that might best suit your needs. And we do that through those partnerships, variety of different funding sources, private lenders, public banks, everything in between, each who offer their own specific programs. And then based upon what it is you want and need and are qualified for, we reach out to those partners and find the right fit for you. And then we help you guide you through the next steps needed for any of those options that you choose. So we'll offer you 1, 2, 3 options. We leave it up to you. It's your business. You get to choose, okay, based upon your recommendations, we'll go with option 2, or we'll go with options 1 and 2. Sometimes that's also appropriate. And then step 3 is facilitating the deal. So we'll help you gather any necessary documents that Marla and her team might have helped you, get together. So your financial statements, your bank statements, and we help you to develop that application, make you look good, and then submit that to our partners. Once we get an approval, we present to you, our clients, term sheets, agreements. And so you are ensured, you have all the necessary information that you need to make an educated decision of whether or not you'd like to move forward. So before you commit to anything, this is what you can expect. And then we would help, then close the deal. And then even step 4. So even if we can't find the right fit for you, sometimes it's you're potentially maybe not qualified, or you're just not in the place to move forward yet. Even if we're not the right fit for you right now, we maintain those relationships with our potential clients and contacts. So we can discuss possible next steps to prepare you for future funding with us, or point you in the right direction to work with any of our associates. And then we can keep in touch at a later date. It's all about the right timing. We're not trying to rush you into anything. A lot of times we'll talk story with people and kind of go through the first couple steps. And then that kind of gives business owners oftentimes an opportunity to assess where they're at cash flow, credit, and collateral wise. And through that knowledge that they've gained through this process, they're able to better understand what it is their business really needs at this time. And if it's not working with us right now, all the better, make the right decision for you and your company. That's what I like about doing what we do. We're not in the business of hard sales. You can't convince someone that they need financing when they don't. So I'm not trying to hard sell anyone anything, which is great. And so how we do that is we offer you the funding solutions, often referred to as capital. And within capital, we have 3 more specific C's that traditional banks and lenders typically require you business owners to have all 3 of these C's. And the 3 C's of capital are cash flow, credit, and collateral. That should sound familiar. I've said those a few times. And so typically private lenders and specialty finance programs can provide funding based on just one of those 3 C's. So rather than requiring you to have all, good cash flow in the green, 800 credit score, and a house you're ready to put up. Typically, the private lenders and specialty finance programs that we partner with, we use just those cash flow. We take advantage of your cash flow being in the green, and we'll get some funding based specifically on that cash flow, or credit specifically, or collateral specifically. And so right now we'll go through each of those different types of 3 capitals, 3 C's. So first, cash flow based funding. Cash flow is any money coming into the business regularly through either cash or credit card charges, typically from selling products. One of the more popular or more commonly heard of cash flow type options, cash flow based funding options, is what we call a merchant cash advance, also sometimes referred to shorthand as MCAs. These funding programs are ideal typically for retail, restaurants, and any other service industry businesses that have regular credit card charges. This type of funding program is ideal for businesses who need quick access to capital. We can typically get an approval within 48 hours. No collateral is required. You can even qualify with like a 500 plus credit score, but you are required to have about 10,000 monthly business revenue and a minimum of 3 months in business. This is this is what you would do if you're needing quick access to capital. It might not be ideal if you don't need quick access to capital, but it can be beneficial if you are in a point where you need it quick. Similar, related, but a little bit different, a little bit more long-term, are what we call revenue-based lines of credit. Again, it's similar to MCA, so think quick capital based on steady cash flow. The terms, so the length of time that you have before you have to pay the lender back, is a little bit longer. Payments are typically monthly rather than daily or weekly, which is what you can expect with an MCA. Similar credit and cash flow requirements, and a slightly longer time in business is required, about a year. So those are 2 of our more common cash flow based funding options. Then we have collateral based funding options. So collateral is any type of equipment, property, or assets under the company that can be leveraged for a loan. The first type of collateral based funding program we'll talk about is accounts receivables, which is also commonly referred to as factoring.
So no, I think we jumped to the first slide.
Oh no. Okay.
Thank you.
I'm seeing it. Let me try again. How's that? Are we on collateral based funding again?
Yep, thanks.
Okay, cool. Thanks for letting me know. Okay, so accounts receivable or factoring is when you utilize any money that's owed to your company, owed to your business within the next 30, 60, or 90 days, and you leverage that for the funding. Typically, lenders can advance about 85% of that money up front. So this is useful for if you're like a landscaping company maybe, or a construction company where you have big jobs coming up that a smaller business would otherwise need to turn down because they can't afford the supplies, the payroll to fulfill that big job. And so we've seen that before, where smaller businesses within the first 3 to 5 years, they got a great like 3-acre property that they can landscape, but they don't have the payroll, the equipment. They're going to need to purchase a new truck. So they have to turn down that amazing opportunity to grow their business. So you could utilize that money owed to the company within the next 30, 60, 90 days, get 80 to 85% of that up front so that you don't need to wait 30, 60, 90 days to get it after the job is already complete. For this type of factoring, startups are eligible, and the minimum amount for that transaction, for that deal, would be $50,000 and up. Another common collateral-based financing is equipment financing. This is useful for anyone looking for expensive equipment, but may not have the best established cash flow or even credit. Actually, D level credit scores qualify, and even startups. This is because it's based on the collateral. The collateral itself, that expensive piece of equipment, is what is being leveraged. So even if you don't have a great credit score, even if you don't have the best established cash flow is typically secondary to the collateral itself. The most common types of equipment utilized in these types of financing is construction equipment, transportation trucks, sometimes medical and other specialty industries, but that's a lot more rare. And even startups are eligible for this. The minimum for equipment financing is typically $10,000. So a $10,000 piece of equipment. And then we come to the credit-based funding. Credit is, primarily personal credit. Again, we've talked about business credit yesterday, but it's still personal credit is king. When it comes to credit-based programs, oftentimes it's your personal credit that's being checked first, and then your business credit. Your utilization of your personal credit, right? Credit payment history, the diversity of your credit, how many different types of lines of credit you have. These are all the things that make your personal FICO score. And then we have the SBA loans, which is not specifically a credit-based program. This is one of the more traditional types of loans. It does require you to have some cash flow and collateral. It's, a top tier type loan program. But we have noticed that it's like strongly based on your credit. So we put it in the credit category. This is ideal for ideal type of working capital for small businesses. Up to $5 million in working capital for the 7A program. It's not completely credit-based, as I previously mentioned, but credit plays a big role. And this is what we call like cream of the crop funding. Not many of these are closed in a year, no matter what lending source you go with. Typically, they have excellently low rates within the single digits, and they offer 80% loan to value, and up to 25-year terms. Sometimes I've seen some people get 30 even. That's with a strong credit profile. So SBA loans is another one that you're probably more familiar with. It is a more traditional type loan. It's another type of program that we offer. And then our most unique program within the industry, and this is kind of our bread and butter program, is the Business Pro program. And so we kind of touched upon it yesterday. This is our program in which we offer our clients unsecured business lines of credit. This program is on average able to get our clients anywhere between $25,000 to $150,000 in revolving lines of credit. Unsecured, some business and personal loans as well. You go through multiple rounds of funding. So some of this stuff is going to sound pretty like unique. This is not something that's very common on the market. So you go through, rather than just a single round of funding, we set you up with your interest rates and we send you on your way. You actually get a team of consultants that work with you to grow and strengthen your personal credit, start and build your business credit, and then help you go through multiple rounds of funding. As your credit profile becomes stronger, you become more qualified for more funding, lower rates. And so your team of consultants are working with you to get you the best rates, the largest amount, maximize the amount that you're qualified for. It is a year-long program that you work with the team of consultants. So whatever it is you're qualified for is what you're getting access to. So at the start, you might only be qualified for $10,000. 3 months later, after we've lowered your personal utilization, grown some of your business credit, maybe now you're qualified for 30. 3 months later, so on and so forth, and we're getting you closer to that 100,000 ideally. through this program, we typically approve 85% of the applicants. This includes brand new startups. I talked to, I would say 7 out of 10 people that I talk to on a daily basis are startups without any cash flow. Some don't even have their EIN established yet. And this is a great place to start to build your business credit and business funding history the right way. So you can be a startup, you can have not so great credit, you can have around a 500 FICO score. I would say around 600 typically, zero cash flow, minimum 500 FICO score and minimum 40,000 household income. And so this can include your business gross income and anyone else in your household over the age of 18. What else do I want to say about this program? This is a really great program. It's been very helpful for any size business, whether they're a startup or well-established, just because so many other companies are really just trying to like get you a line of credit and that's it. This is an intensive, which is not always for everyone. Some people do like that clean cut, just run me my money and be done with it. But this is a kind of a guidance, you know, you have a personal credit consultant, you have a business credit consultant, and you have a business finance strategist. So you have a team of 3 people working with you on your profile to strengthen and grow your credit even further and maximize the amount of funding you get access to. And that is all of our programs that we offer. And so today we went through who we are as Alliance Commercial Finance, the role that we play with our clients, what you could expect if you choose to set up an appointment with us, and some of the more common programs that we might be able to offer you if you do choose to work with us. And so if you have any questions, I would love to answer them at this time. Oh, and we got one in the chat. So yesterday I talked about how most people max out their personal credit card starting their own business. Is there a way to help someone that has established a good business, but is drowning in that max out credit from the beginning, becoming debt free and moving forward financially? That's a great question, Ashley. Thanks. Yeah, that's not an uncommon situation. Sometimes setting them up with that program that we just talked about is the right solution for them, because again, we're working with them to grow and improve their personal credit, help them by building their business credit. We're allowing them to step away from relying on that personal credit and allow them to build up business credit under the EIN instead. So you're taking the right steps forward to move away from maxing out your personal credit cards. But it really depends on where you're at. So kind of how deep is the hole that the business owner might have dug. In those situations, that might be where we go to the step 4 of where I have a docket of professionals in my circle that I'm happy to refer business owners to if they're in need of debt consolidation, if they're in need of improved, working on how to properly budget and get themselves out of debt. I have a couple of contacts that I've referred people to. And then, again, it's not goodbye, but it's go work with, my friend Daryl, go work with my friend Lindsay, and then we'll come back and talk story when you're ready to move forward. If you find that down the road, this is what you need. So yeah, it's a case by case basis, but it's typically, we could offer you this program here, our Business Pro program, or I can set you up with a debt financer or a debt consolidator, or both. Sometimes we've done both simultaneously if the client so chose that that's the right fit for them. Charge for my services, yes. Well, yes and no. So the first few steps of let me close this out. The first few steps of our process is completely free. So the initial consultation, letting you know what it is you're qualified for. We're similar to a real estate agent. We don't get paid until the deal is closed. So, and that's typically done through our partner. So you don't have to write us a separate check or anything. We make a pointer percentage off of the closing deal, very similar to a real estate agent or a mortgage broker. And then each program has its own costs, depending on what it is you choose to go with. Each have a different cost. Contact information. Yes, absolutely. I'll put my contact information in the chat again, along with my calendar link, which you can click on and set up a one-on-one consultation with me, either over the phone, on Zoom, or even in person. I love going to coffee shops. And yes, the website should also be on there. If it's not, here it is. Oh, I didn't make it a. If you can just copy paste them into your website URL. The charge is in addition to the interest you pay on loans. Yes. Yep. And you can expect that with really any funding source. The interest goes to the lender itself. The success fee or closing cost, right, is separate. Great questions.
Last questions. We have Sanoe's contact information. As I mentioned, this is recorded, so we'll send out the link. You can review all this information on your own. And I'll also include Sanoe's contact information and our contact information, so you're aware of our counseling and programs and other services as you prepare for lending.
Awesome. Thank you guys so much. Thanks for the great questions. It's very fulfilling when everyone's engaged and interested in the super sexy topic of business finance. So
thank you, everybody. Thanks, Sanoe. We'll be in touch.
Yeah.
Bye.